Hello, everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and with me today is John Devine from BlockFills. Hi, John. Thanks so much for joining me for this event today.
Greta, thank you for having me. Hello, everybody.
All right, so you're new here for our audience, and we're talking about a whole new topic than we typically discuss here. So I'm really excited about this. So go ahead and introduce yourself for the audience, who you are as a trader, what you've done in your career, how you got to where you are today, just kind of the Cliff Notes version of you.
Yeah, sure. Well, this is an exciting day for me because T3 is obviously just an absolute monster in proprietary trading. And I've always been, looking forward to speaking to the audience here. So hello, everyone, as I said in my intro. I think to start with my story, it's important to say that, I'm from Chicago. And Chicago's famous for a lot of things, but we're certainly known for our commodity markets. And, growing up here, there was always an attraction to what happens on those trading floors. And at the time when I was a young guy, it was pit trading, right? You see the guys with the signals and they're yelling at each other and they're pushing each other. And it was just an attractive thing to me. So I spent my early adult life figuring out how to become a trader. And, that led me to, in college, I studied energy markets. So I get my undergraduate degree in renewable energy technology and economics. And that kind of led me into electricity markets. And then, in grad school, I went off and studied energy systems and fuels management. And that led me into crude oil markets, natural gas, coal, those kind of markets, uranium. And, so I did a little bit of a stint before I became a trader in energy markets, in solar in particular, and energy storage. And some interesting strategies, kind of started to come to me in that regard. So I came back to Chicago. I had moved out to California, and I came back to Chicago. I said, I want to get into the CME, the Chicago Mercantile Exchange. And that's the largest venue for futures market trading in the world. And then, of course, right next door to CME is Chicago Board of Options Exchange, which is just a famous venue for bringing professional options markets to investors all over the world. So I'm not a guy who knows a guy, so to say. So I had to figure out a creative way to get into the business. And what I did is I went and stood outside the pit or the doors that all the traders would walk into to enter the pit. And I just stood there for, I don't know, about 3 months. Every day I would show up with my resume and, hand it to people, and most of them just threw it on the ground or tossed it in the garbage, and that was that. But after about 3 months, I caught a break, and I ended up behind the screen, so not on the floor, but I started my career on the screen, and they put me in the Asian hours and the European hours. So I was trading between 7 p.m. Central and 7 a.m. Central from Sunday night to Friday morning. And I was focused on precious metals markets. And precious metals markets along with interest rates. I did some energy markets as well, some crack spreads in crude oil and the gasoline and diesel components. And then I also traded the euro dollar. So I did that for a number of years. It was started off as a point and click trader, really. But this was also in the time of black box execution really coming on and, doing everything algorithmically. So I began that transition, pretty early. Started developing black box systems for algorithmic execution and really pure market making as opposed to speculative positional trading. So, this led me into forward curves in the futures market. And, had a good run making markets, not just in the front month or the first few contracts, but really all the way down the curve, up to 18 months from the front month contract. That was kind of my foundational experience that provided a lot of education. I think as most people who are listening to this call know that, until you get into a market and you have some skin in the game, it's hard to learn. So I got to learn. I had great mentors that helped me learn, and being in precious metals made me very aware of what was going on, not just in gold, copper, silver, platinum, palladium markets, but also in foreign exchange markets. And this all kind of transitioned into December 2017 when the CME launched the first Bitcoin futures contract. And that's where my journey into crypto really started. I ended up getting hired by a hedge fund that traded Ethereum and Bitcoin, and I did the buy side for Bitcoin and Ethereum for some time. And then now I'm at BlockFills, and BlockFills is a major liquidity provider to institutions that are transacting in digital asset markets. That's going to be proprietary traders, hedge funds. We even deal with, Bitcoin miners, for example, Ethereum stakers, and we work on strategies to help them hedge or help them manage risk or find passive income opportunities. And the journey has been, commodity markets are really the foundation for interconnectivity for all people around the world. And, when you get to trade these markets, you realize just how interconnected our world is. The price of corn in Chicago affects food prices all over the world. The price of oil affects everything. I can just keep going down the list. But that's been my biggest takeaway from my journey as a trader, and all the way from commodities to digital assets is these markets, although they're fun to speculate and design strategies around, these are the markets that really drive our world forward.
Yeah, totally. What would you say was the biggest lesson that you learned from those early days in your career that you still carry with you to now?
Yeah. I think the biggest lesson is understanding how to manage risk. And any trader who can survive in the markets has to learn this somehow, some way. You either learn it by blowing through accounts as a retail trader, or you learn it by dealing with risk managers on a professional proprietary trading desk, and following guidelines from senior traders who have been doing this for their entire career. So learning how to manage risk, learning how to take losses, learning how to deal with the highs and the lows, always staying even keel, no matter how good things are going or how bad things are going. Everything is relative, right? That's the biggest lesson. But then from a technical perspective, I think learning not just about spot markets, but about futures markets, options markets, associated forward curves, volatility metrics, and volatility markets. And then just how all assets seemingly have some type of relationship, either positively correlated or negatively correlated. And being able to identify those relationships, and then of course being able to design strategies that can take advantage of those relationships.
So you entered the digital asset space in 2017, correct?
That's when it first came. Let me say it this way. So Bitcoin came as a precious metals trader. Bitcoin came on my radar super early. But it was hard, as someone who was quote unquote professionally trading, it was hard to take Bitcoin seriously for a long time. It seemed like a Wild West market. Really couldn't, understand who are the players, who controlled liquidity. It was hard to get there. But when CME launched that futures contract in December 2017, that was the point where you could no longer ignore the asset. It was coming into traditional finance, and it was almost irresponsible at that point to not learn about it and to not pay attention to it. And then once you go down the Bitcoin rabbit hole, it's really hard to come out of it. So, that was when the CME listed the contract, my journey began.
Just for everyone who's here with us live, I just want to give everyone a reminder that this is a conversation between John and myself, but also you guys and John. So be sure to submit your questions in the live chat on LinkedIn. I've put a comment there just so you guys can see where it's at. And toward the second half of this event, I'll make sure that we get to all of those questions and get them answered before we wrap up here. So as they come up, just go ahead and submit them. Even if it's totally unrelated to what we're currently talking about, we will answer all of them at the end. Okay, so what was it about digital asset trading and this entire space that made you interested?
Yeah, so initially it was the liquidity was extremely fragmented. So there was hundreds of exchanges all over the world. The price of Bitcoin was different at all these exchanges. So like there was super low hanging fruit to identify arbitrage opportunities. I think that was initially interesting, although as most of us know on the call here, markets get pretty efficient quickly. So the ARBs, certainly didn't stick around for a long time, but that was interesting. And then I think when Ethereum, really started catching attention, that made it even more interesting because now you could have a spread, and you could be long Bitcoin, short Ethereum, or vice versa. That adds a whole different dimension to position and risk management. And then aside from trading, I think what Bitcoin is setting out to do is decentralize money. And coming from a precious metals background, I understand all the reasons that people are involved in gold markets, and a lot of those reasons seamlessly transition to Bitcoin. And some even say that Bitcoin is digital gold. That's some people's take on what the asset class is. At the end of the day, this all coincides with a macroeconomic reality that we're witnessing in the United States and globally, which is really a separation of those who control the supply of money and those people who pay taxes with that money. And what I mean by that is, if you look at the supply dynamics of US dollars, it's atrocious. They have been printing dollars. I mean, the United States government is $33 trillion debt. That transitions to about $1 trillion a year in interest rate payments. Okay. And so these talking points are why gold is such an interesting asset class. But then you start talking about, there's a saying in Bitcoin, not your keys, not your crypto, not your keys, not your coin, I should say, excuse me. And what that means is Bitcoin is a self-custody asset. You can take control of your own Bitcoin and no one can take it away from you. And I think that's different than gold. Gold, you still have to trust the old regime in a sense. Gold gets stored at banks, and it's not your gold until it's in your pocket or until it's in your possession. So going through this transition, Bitcoin to me is decentralized money that has a fixed supply. It's unconfiscatable when you self-custody the asset. It's censorship resistant, meaning that you can send it to anyone, anywhere in the world. No one can stop you. I think that's extremely powerful. And then when you push that dynamic against, I'll call it the mismanagement, I'll be soft, and I'll say the mismanagement of fiat dollar supply dynamics, Bitcoin seems like an answer to a system that people feel like they're being robbed through inflation. They're holding their savings in a savings account in dollars, but every year that savings goes, the value of that account depreciates based on the inflation metrics. Bitcoin seems like an answer for those people. And then Ethereum is a global settlement layer for application specific tasks. So it's, in short, what does that mean? It means removing the middleman from settlements. And think about, it's often easier to explain it on like an analogy, but right now, you can conceptualize, let's say music, take an application like Spotify. And right now I download my Spotify app. I'm listening to music. I pay, what do you pay? $15 a month to Spotify. And then Spotify, as a centralized entity, distributes rewards to artists that attract listeners to their platform, right? But
Mm-hmm.
Ethereum, from a fundamental perspective, you can create a fork of Spotify, cut out the middleman, and directly pay musicians every time their song is listened to by a user. You don't need a centralized authority. That's just an example of the decentralized nature of a global settlement layer. Obviously, the more interesting things that people in markets are talking about with Ethereum are decentralized finance, being able to transact at an exchange look-alike. They look like exchanges, but there is no centralized counterparty. It's peer-to-peer. It's bilateral execution. You don't need permission from somebody. You don't have to onboard and KYC. Like, there's obviously problems to that, especially if you're talking about professional trading. But from a, I guess, libertarian perspective, Ethereum opens the floodgates for an incredible amount of possibilities.
How would you say this space has changed since you first got involved back in 2017 to now?
Massive.
Mm-hmm.
So talking 2017, this is the first publicized Bitcoin bull run, right? Bitcoin went to 17,000 plus dollars per Bitcoin in 2017, and it actually it's interesting. The top of that run directly coincided with the futures contract listing at CME. You know, there's many people who think that the futures contract at CME allowed, you know, big pocket, deep pocket money to come in and short Bitcoin, where they really did not have as many avenues to do so before that. But regardless, to the question, Bitcoin was just seen as a speculative, get rich quick asset in 2017. It was, you know, almost like degenerate gambling, to be quite frank. And the type of users that were interacting with Bitcoin were really just looking to make money. There wasn't much more to it. So Bitcoin had to go through a maturation process, and it's still going through that. We're not to say something that people often say when talking about, but we are still really early. Okay. Yeah. And what I mean is, you know, from 2017 to today, people have now had to understand what is Bitcoin. Okay.
Yeah.
And let's just not look at it as a speculative asset, which, you know, it can be, but what is it? What is the Bitcoin protocol? And what is Bitcoin? And when you ask that question, you almost have to ask, what is money? Okay. And when I say to you that question, what is money? Most people don't have a good answer. Maybe it's skewed on this webinar, given the audience, but think to yourself, you know, all those who are listening, what is money? What's your answer to that? Right. And I think you'll probably have some self-reflection and say, maybe I need to do some more digging on what money is. And that goes back to, really does go back to Bitcoin. So through this maturation process, we've seen like a, how do you say it properly? First they laugh at you, then they fight you, then they join you. I think that's kind of the stage of Bitcoin adoption, and we're currently in that then they fight you stage, but we're slowly going to the then they join you stage. And what I mean by this is Wall Street analysts have to sink their teeth into this asset, and they have to ask the hard questions. And when they're asking those hard questions, I think a lot of them are realizing, oh my gosh, there's technology here that can really disrupt the system. And, you know, I don't want to get into the system, but the banking system as we know it today, right? So once this becomes apparent, and this, I would say this became apparent in, let's call it like 2018, 2019, 2020. So once this became apparent, the you know, traditional markets had to create a narrative really on why they cannot get involved in the asset. We saw this from JP Morgan Chase. We saw this from Citadel. I could keep going down the list of massive traditional finance firms that said, you know, we will never trade Bitcoin. We'll never allow our clients to trade Bitcoin. I think Jamie, Jamie Dimon from JP Morgan even said he would fire any employees who were caught, talking about the asset or caught trading the asset. Anyway, so we ran into this wall of like what's the narrative going to be from the traditional market as to why they cannot participate? Okay. But with technology, as so often is the case, you just can't stop it. It's the momentum and the need for evolution is the driving force behind technology. So Bitcoin just falls into that. And it's almost like the harder you push back, the more it pushes forward. So now that, going through 2018, 2019, 2020, the narrative, that those initial narratives on why we will, why traditional markets will never get involved in Bitcoin started to crumble. Okay. And then all of a sudden COVID hit. And when COVID hit, you had a lot of people with a lot of time on their hands, and they had access to smartphones and they had access to the internet. And, they started looking at, trading just took off in general, both in traditional and digital asset markets. But aside from that, the discourse on these bleeding edge assets really hit the internet, and Twitter and all these social media platforms. The discourse got louder and louder and louder, and we kind of hit this point where a bunch of really smart asset managers. I think Paul Tudor Jones was one of the first big asset managers to throw his hat in the ring and said, Bitcoin's not going away, and my fund is going to start getting involved in Bitcoin. Once you started having people like Paul Tudor Jones make these statements publicly, it became almost a fiduciary responsibility for fund managers to investigate the asset and stop just downplaying it with these narratives of why they'll never look at it, right? So you get some big hedge fund managers who buy into the asset, and this created a cascade. So then it became a rush for information, and everyone in Wall Street had to learn about this stuff and what's going on and what is this and what are we dealing with, and that's where we're currently at right now. So we're kind of transitioning out of this then they fight you to then they join you stage of technological adoption, and we're seeing that through institutionalization of the asset. So the big headline is BlackRock. BlackRock's coming for an ETF. Well, aside from BlackRock, there's like 11 other major Wall Street firms that are trying to launch an ETF in the United States. And ETFs have already been launched, in other countries around the world, right? So here we are today, and we're coming out of the then they fight you stage. Bitcoin is becoming institutionalized, liquidity is building, derivative markets are trading. Bitcoin miners, who are the producers of the asset, are starting to do balance sheet risk management just as a gold miner would do. I think it's an extremely exciting time as we're in the first inning of institutional Bitcoin.
Let's talk a little bit more about the BlackRock thing. That's kind of the next big step toward institutionalization. And the traditional markets kind of accepting this as part of the traditional market. BlackRock is working with the SEC, of course, to list that spot Bitcoin ETF. Explain what that would even be, kind of what it'll mean to the market, and how you would expect things to change as that listing happens.
It's hard to understate how massive this event is going to be. There are already, as we talked about, the CME, Chicago Mercantile Exchange, launched a Bitcoin futures contract in 2017. Okay, and the Chicago Board of Options Exchange did the same thing, by the way. So both these major derivatives venues for traditional finance have been in the game for a long time, relatively speaking. But the difference here is that the BlackRock ETF is for spot Bitcoin. Okay, not paper Bitcoin.
Just explain real quickly what spot Bitcoin is.
Yeah, so actual Bitcoin. So like when we talk about the CME contract, you're trading a paper derivative, and that's fine. That's what trades. That's how most derivative markets trade. They're not the physical asset. It's a contract. that has a price for the underlying asset, right?
Right.
But in this spot ETF, actual Bitcoin needs to be bought every time a spot Bitcoin ETF is purchased. So the reason this is massive goes back to, as I was talking earlier about some of the fundamentals of Bitcoin. It's got a fixed supply. You know, we talk about US dollars can be printed into infinity, right? But Bitcoin's a fixed supply. There's only 21 million Bitcoin that will ever exist. All right. This is defined by the protocol that was launched into the world in 2009 by Satoshi Nakamoto. No one knows who this is. It kind of part of the whole thing is that we don't know who started Bitcoin, but so there's only 21 million Bitcoin, right? And BlackRock's the largest asset manager in the world. Do some math. How many millionaires exist in the world? Okay. I don't know the exact number. You can Google it, but it's more than 21 million. So if every millionaire wanted to own one Bitcoin, it'd be impossible. All right. Now think about that there's more than 8 billion people on the planet. All right. So this is going to drive just a massive demand for a very, very scarce asset. And so just basic supply demand principles suggest that the price of Bitcoin can go significantly higher from this demand for spot Bitcoin, not paper Bitcoin.
Great. Okay. Another major event coming up is there's a halving event in early 2024. I think it's April 2024 for Bitcoin.
April 24th is the expected date.
Okay. So explain halving, like cutting in half for everyone, what that is going to mean for the coin and how it will impact the market as well.
Yeah. So Bitcoin, I'm not going to get into the fundamental technicalities of Bitcoin, although I'd be happy to talk with anybody about them. But from a high level, Bitcoin is brought into existence when every 10 minutes a batch of Bitcoin transactions gets validated on the network. And when every 10 minutes, when that validation occurs for transactional data to be added to the chain of blocks of data, blockchain, a block reward is distributed to the validator of that block. And we call these validators miners. And when Bitcoin first came into existence back in 2009, 50 Bitcoin were distributed every 10 minutes as a block reward to miners. Now, at the time, Bitcoin was virtually worthless, okay? But fast forward to today, every 4 years from the Genesis block, the first block of Bitcoin transactions mined, every 4 years from that point, the block reward gets cut in half. So from 50, after 4 years, it went to 25 and so forth. And currently, today, as I speak to you, every 10 minutes, 6.25 Bitcoin are released into the world to the validator of a Bitcoin block, 6.25. On April 24th, 2024, that block reward is going to get cut in half to 3.125.
Just over 3. Okay.
Yeah, 3.125 Bitcoin will be distributed every 10 minutes starting April 24th and going forward. And then
is this because the supply is continuing to dwindle? We're getting closer and closer to that 21 million already mined number.
That's right. So if you look at the supply chart, it caps, and every 4 years the Bitcoin block reward will cut in half until only 21 million Bitcoin exists in the world. Okay. And so right now there's just over 18 million. We're really getting to that, that back end of distributions. So this, like the BlackRock spot ETF coinciding with the fourth halving event for Bitcoin are just massive. Bitcoin halving as a supply shock, and the BlackRock and 11 other ETF applications are a massive demand shock. And when you combine these two things at such a close time, or we're expecting the ETF to get approved next year anyway, when both of these factors come into play at the same time or similar time, the market can really, I mean, price discovery is going to be fascinating to watch.
Okay, let's get into some audience questions. I have a few more, here, but I want to make sure we're answering these questions. So our first comes from Corey. He asked if you see BlockFills getting more active on listed exchanges like CBOE Digital or CME Group.
Yeah, so I mean, not to get too into details on BlockFills does business with, but I think I think it'd be obvious that BlockFills is certainly a proponent of these world-class institutions that have been the anchor for financial markets to begin participating in digital assets. And we would certainly be fully supportive of those efforts in all the capacities that we have, which BlockFills is a liquidity provider to institutions in digital assets, proprietary trading groups, hedge funds, exchanges, OTC desks, etc.
So it's saying that you're a liquidity provider. Explain, what that means. Like, how are you providing liquidity?
Provider provides bids and offers. Yeah, providing bids and offers to the marketplace. So, when you open up an exchange and you look at an order book, that order book is empty. So someone has to come in and make a price and say, you could use gold as example. When the gold market opens, orders have to populate in the order book. And there are plenty of actual end users of gold, for example, but there's not enough actual end users of gold to always have a 24/7 or, whatever you want to say, 23/5 bid offer price. So liquidity providers are market participants who supplement exchange liquidity by committing to always showing a bid, a price at which they would buy the asset, and an offer, a price at which they would sell the asset. And that's
you guys are doing this in Bitcoin and Ethereum mostly.
We do this in Bitcoin, Ethereum, and a multitude of digital assets, correct.
Okay. Ryan said, speaking for the retail stock traders here, could you explain what BlockFills does, which you kind of just did, but also how a regular trader might ever interact with you guys?
Yeah, so this is where, I'm going to share my screen. Let me share my screen. So we interact with, let me see if I can find, I got a lot of tabs. Okay, there, I think that's the right one. Let's see now. So I'm showing here, these are my books, which I want to talk about for a second, but let me get to the question. So BlockFills, we serve traders. So aside from serving, institutions in digital assets, we also serve traders. And you can see just a screenshot on my page. This is called Phoenix. This is BlockFills execution platform. And it's really a pioneering institutional or professional trader platform for digital assets. So it looks, I'm sure it looks similar to a lot of platforms many of the people on the call here interact with in their day-to-day trading, but we've tailored the system to be optimized for trading Bitcoin, Ethereum, and everything else that falls within digital assets. So that's the low-hanging fruit and how we would interact together. Proprietary trading groups come to us, they take this technology, they execute orders. That is probably the extent of it for what we're talking about here.
Okay, so you guys are supporting this trading platform.
Yes, this is BlockFills trading platform. So the reason traders come to us is instead of going to a public exchange, trading with BlockFills is executing into a dark pool. And what I mean by that is when you trade with BlockFills, your orders are not made public. So when if you're a size trader and you want to move some serious notional value around, instead of going to a public market that has public data, you can execute dark. And a dark pool is what BlockFills offers. So that's one of the reasons why proprietary traders enjoy executing with us. We have deeper liquidity than the average exchange, better pricing. In terms of the bid offer spread, we don't charge trading fees. Those are the kind of reasons that professional traders and semi-professional traders interact with us.
Okay, so that's like the
And then
difference
I'll
between.
actually, can I roll on
Sorry,
this,
that's the
Greta? Can I go ahead?
yeah, go for it. But I was going to say this is kind of a different, like you would, that's the
Go
benefit
ahead.
of working with BlockFills and using Phoenix, correct? Versus maybe, buying Ethereum on like Robinhood, for example.
Exactly. So if you're an active trader, um, there's so many advantages to coming directly to liquidity, especially dark pooled liquidity and liquidity that is hyper focused on execution efficiency.
Okay.
So there's going to be a difference between trading at a Robinhood or the likes, because just that market, although it's fantastic, and I love everything those types of companies do for the marketplace, they're not as tailored for I would say super active traders. So people that are interacting with the marketplace regularly would look for optimizing their execution in terms of what is the cost to trade, how good is the liquidity, how good is the technology, the runtime, stuff like this, and that typically leads people to BlockFills.
For our audience here, just explain the relationship between BlockFills and T3.
Yeah, no, that's a great question because I was going to segue anyway. So T3 is a strong partner of BlockFills, and I think I have it somewhere on this tab. Yeah, so we have there's kind of a bunch of parts here, but this is our T3 Live room. And this is not actually T3 Live via BlockFills, but it's T3 Live via a partner of BlockFills called Dharma Capital Trading. And Dharma Capital, they're pioneers in digital asset markets. But I'm not sure how many people on this webinar, Greta, how many people on this webinar are familiar with T3 Live platforms?
I would say most of the people
Okay,
on here,
so people
if they work
generally,
with T3 Trading Group, they're in the Pro Desk virtual trading floor with T3 Live. They're in the Alpha team with Scott. So most of our audience knows about the VTFs. Yeah.
excellent. All right, so the virtual trading floor is, I can't overstate how impressed I am with this technology. VTF is like 10 years ago what I would have dreamed about joining as a young trader, or even just even a very seasoned trader who is looking for community interaction and the sharing of knowledge and market facts. So most people are pretty familiar with the setup of a VTF, but if you look here, we have our main chat room where traders go back and forth on, what they're seeing in the market, all this stuff. We have alerts up here for, any numbers that are coming out from TradFi or any events that are happening in digital asset markets. But my favorite part about the VTF, for what I'm doing anyway, is being able to broadcast analytics. And Dharma Capital, the gentleman who runs the analytics there, his name is John Slazis, and John has an absolutely storied career in trading. He came off the floor in the 80s. He was a pioneer in electronic execution, and John preaches market facts, and so not technical analysis, but I would say more so structural analysis, the structure of a market, looking for truth in the marketplace. So not support and resistance levels, not RSI indicators, but actual market structure. And I'm just giving you like a little preview into what we do, but we provide daily commentary against daily market structure, weekly structure, monthly, quarterly, and yearly structure. And when you combine daily, weekly, monthly, quarterly, and yearly market structure, very interesting stuff begins to align. And you can take defined trades where you really have a grasp on your risk reward, and you define your profit targets, and you define your stops. And I think that's going to be the biggest hurdle for any trader trying to get into digital assets is managing that risk on positions. So with our VTF, we have a bunch of traders in here, and we're talking markets all the time. This stuff here that you see, these colors on the chart, they all mean something. This this system has been developed over 30 years. It's incredible how long and how many professional traders execute against this stuff. And what I love most about this room is everybody is going to learn something. If it's your first day in the markets or you've been in the markets for 35 years, the stuff that's being shown here used to be behind closed doors. And what we're doing is we're bringing this to, semi-professional and professional traders that are coming into crypto. So something to learn for everybody. Here we're talking about Ethereum, but we also do Bitcoin analysis and a couple other markets as well. And we do TradFi analysis with this stuff too. There's, we cover the VIX, we cover the S&P 500, we cover gold, oil, a number of different commodities as well.
Okay, great. For now, go ahead and pull down your screen just until we need.
Yeah,
we'll talk about your books in just a bit. But there's another
Sure.
audience question I want to make sure we get to. Elijah said, what are some practical ways we can understand the crypto space and evaluate a cryptocurrency's value, specifically the big three, Bitcoin, Ethereum, XRP, going into next year in particular? How does the world market / traditional banking and finance affect the value? And what are the main drivers that a trader or investor should look for going into Q1 and Q2?
Well, then we're going to talk about my book faster than we thought. So I'm going to go back and share the screen. So great question. Number one, if you, these are books I've written on trading. As you can tell, I'm pretty into it.
Make that full screen, so then it'll fill the screen for us. Yeah. There you go.
How about that? Great. Yeah. Okay. So yeah, these are books I've written on trading over the years. And if you're trying to figure out about Bitcoin in particular, you need to read this book, Bitcoin Options. Okay. So Bitcoin Options, it's a book about actual options contracts for Bitcoin, but it is also a book about the option of Bitcoin. And it kind of gets into the fundamentals of what Bitcoin actually is and how you can think about valuation for Bitcoin. One of the biggest things that book talks about is when you're quoting the symbol for Bitcoin, it's BTC USD, right? Typically, anyway. And the denominator there is extremely important. The dollar, the US dollar. So Bitcoin, as we've talked about through this call, it's a fixed supply asset. It's an inflation hedge. And the value of Bitcoin is largely driven by the mismanagement of fiat currencies. So that's where I would say to start with, if you want to try and wrap your heads around what is Bitcoin, how do you value Bitcoin? There's obviously no cash flow statement, right? There's no balance sheet. It's not like valuing a stock. Okay. It's going to be more like valuing a commodity like gold. The big difference between gold and Bitcoin is that the higher the price of gold, the more gold mines become profitable, and you can dig for more gold and you can find more gold in this world. With Bitcoin, the higher the price of Bitcoin, the supply does not change. So that's a kind of a good analogy for understanding valuation. And then, like, more broadly speaking, how do you value digital assets? I'm going to go back to my VTF, and I'm going to say oftentimes traders need to kind of put blinders on and not get caught up in what they think the value of an asset should be, but go back to market structure. And market structure is how you define risk and reward for trades and how you survive in markets when you're actively trading. Actively trading is different than looking for an investment and valuing an investment on something you plan on holding for 10 years because you have a thesis for valuation. Okay. What we're talking about here is figuring out how to manage risk in markets. And so I try to put my blinders on and I listen to market structure and I search for market facts only. And anything else really just becomes noise that affects my decision-making as a market operator.
All right, great. And for the second part of his question, when he said, what are the main drivers that a trader or investor should look for going into Q1 and Q2? Would you say that's probably like the BlackRock ETF, the Bitcoin halving, those events that are coming up?
It's all eyes on BlackRock. And, I hate to just always say BlackRock, but they're the largest asset manager in the world. There's a number of other Wall Street firms that are launching spot Bitcoin, or they have applications to the SEC for spot Bitcoin ETFs, right? That's going to be the biggest catalyst for Q1 2023, either if it's approved or not approved. And then from a fundamental perspective, the Bitcoin halving event in April 24th, to be specific, is the major fundamental driver for the industry. And crypto markets, Bitcoin generally is the base asset. It leads the way. So where Bitcoin goes, generally these alt markets go, and the alt markets just provide for elevated volatility.
All right, so go ahead and pull your screen down again, so we can just keep talking here. What would you say you think is the biggest misconception about the digital asset trading space?
I think once you get through the hurdle of that, that first they laugh, then they fight, then they join. Kind of once you get through all that stuff and you've acknowledged the industry as a tradable market, and once you're through that, then I think the biggest misconception is liquidity. People, professional traders, all the time, they say to me, John, we want to get involved, but like, is there liquidity? Are there professional market makers? And the answer is a resounding yes, yes, yes. There's a ton of liquidity in this market. It's massive. I think, in the United States, we're kind of behind the curve a bit. I mean, this is a global marketplace. It trades 24/7. There are no breaks. This market does not stop. And outside of the United States, the trading activity is massive, especially out of Asia, and now really the Middle East is coming on aggressively. So like when I talk about, what I specialize in particular are options markets and structured products markets. And I work on, defining risk management strategies and real yield and passive income opportunities for people who are involved in these markets. And the nearly always the question is, John, can you trade an option on Bitcoin that expires in a year? And the answer is, yeah, you can trade it for size. You can trade options that expire in 2 years. Okay, there's an entire curve. There's an entire forward curve. And actually, one of the most interesting trades right now in Bitcoin is the basis trade, where you're long spot Bitcoin and you're short a futures contract, either that front month contract, or you're out 6 months, or you're out a year, but you're locking in the basis. You're long Bitcoin and you're locking in your sale price, and the forward market, that basis is trading. Last 2 days ago was trading 12.5% annualized. You could lock in a risk-free rate of return, except there's counterparty risk, of course, as with everything, but a risk-free rate of return of 12.5% just by buying spot Bitcoin and selling futures markets. So that's one of my favorite trades in this industry. So the short answer is liquidity is there, and that's one of the biggest misconceptions for this market and then also the instruments you can trade. You can trade options just as you trade options on gold or stocks. You can trade futures markets. You can even trade structured products. I mean, I'm not sure if the community here is into like accumulators or decumulators. These very specific structures that can be developed through digital exotic options and vanilla options. Even those products are available for Bitcoin, Ethereum, and other digital assets. So long-winded answer, but there you go.
All right. Brian says he's got to put you on the spot. What's your 1-year target for Bitcoin?
So again, I hate and Brian, I'm not dodging you. I'm not, but I'm a professional trader. If I made predictions, I wouldn't have a job. So like the first thing you learn about trading is like the last thing you want to do is convince yourself on what might happen. So I hate to do this again, Greta, but I'm going to share my screen. And I'm going to go back to, this is what's important: market structure. Okay. And market structure is measured on a daily basis, on a weekly basis, on a monthly, a quarterly, and a yearly basis. And if you deviate from market facts and start trying to forecast, you're going to find yourself in trouble. So do I have bias long Bitcoin? Certainly, I am bias long Bitcoin into the new year based on these catalysts we've talked about. But I don't want to get into targets because it's again, put the blinders on, focus on market facts, execute responsibly, manage risk, and reap the rewards from the marketplace.
Great. Makes sense. We are coming up like our last 10 minutes here. So anyone who's still with us live, just make sure to submit your final questions for John. So this space, of course, as many know, is known to be more volatile than traditional trading like equities. So talk about your personal strategy when it comes to this type of trading. You are actively trading in this space. You're not just an analyst talking about it, and how you develop that strategy over time.
Yeah. So, again, I think I've said enough on how I approach the market. I approach the market from a market fact standpoint. Structure cannot lie. It is the market structure. Okay. And if you don't know what that means, you need to come into the VTF room, and in 30 days, your entire perspective on the market will massively change for the better. But anyway, I won't keep talking about market structure. So when I think about execution, once I have a risk reward scenario that looks attractive and matches with everything I work on from an analytics perspective in our VTF room, then it's thinking about how to execute that strategy. So I'll give you a simple example. Let's say I want to buy Bitcoin, and I've identified market structure on where I would like to buy Bitcoin. So most traders will say, oh, you can put a limit order into the order book, and if the market comes into your order, you get filled. Great. Now you have your stop order and you can put your target. Done. Okay. Well, I'm gonna share something. Instead of putting a limit order in to execute my position, especially in Bitcoin and high volatility assets, I'm a fan of selling put options. When you sell a put option, you can specify the strike price and the expiration date. And when you sell a put option, you have the obligation to own the asset at the strike, right? So why is that beneficial? Well, when you sell options, you collect a premium. There's someone who's buying that option from you, and they're willing to pay a premium for that optionality. So day one, when you sell a put, your trading account gets a credit. And I like credits. So let's sell puts to initiate long positions. And then you can even think about it the other way on the upside. Once I'm in a position long, instead of just having resting orders to sell, which also have, I'm not saying it's an either or, it's all complementary. But once you have a position on, you can begin selling call options against that long position. And when you sell a call option, you have the obligation to sell the asset at the strike price, but you get paid a yield, and you get paid a yield by the call option buyer. And so I'm very into taking advantage of implied volatility and getting paid to place orders. And then, having the, and by the way, when I talk about this stuff, I'm talking in fully covered terms. So when you sell a put option, you have the dollars to fulfill the obligation. I'm not talking about selling leveraged puts. I'm talking about selling covered puts. And I'm also talking about selling covered calls, where you're not leveraged, but you have the asset and you sell a call option against it, and you can create a yield. Okay, so that's one example. Another example is something I've actually, in my book, just give me a sec here, Greta. I hate to keep going back to it, but I have to, because this book is fascinating. It took me 10 months to write this thing, and this is for free, by the way, everybody. All these books are for free on my website, and they're extremely helpful. But if you look at the content page of this book, Bitcoin Options, Chapter 5 is strategy and execution. Okay, and Chapter 5, strategy and execution, is extremely powerful. One of the strategies I talk about there, I've coined it the optimized hodl. And the optimized hodl, for those who don't know what hodl means, it means hold on for dear life. It's what we call people who buy and hold Bitcoin. Anyway, when you're long an asset, you can sell an out-of-the-money call option, collect premium yield, and now you have an obligation to sell the asset at that price. But instead of collecting that premium as you do in a covered call, you can take that premium and buy put options for free. So now you're long the asset Bitcoin, for example, you're short the out of the call option, and you've taken that premium from the call option sale and you've purchased a put option for free. So you have a 3-leg strategy: long the asset, short the call, long the put. The put defines your max loss on the position. And you can reverse it, by the way. So you can sell puts and buy calls for free.
So would you say this trading strategy within the crypto space is very comparable to what maybe equities traders are used to doing within the traditional options space?
Certainly. So, again, it's almost like when you pull up the ticker symbol on your chart, you can just cover the ticker symbol, right? Who cares? At the end of the day, that's another thing, like the blinders, cover the ticker. And the same thing with Bitcoin. It's just another marketplace. All the strategies are the exact same from traditional finance, except it's a digital asset and it's new and fun and exciting, but it doesn't take away from the fundamentals of trading, which are applied in Bitcoin, and almost even more so, given that the volatility of the asset is extremely elevated.
Got it. Great. Okay, so as we come up here on the end of this, I just want you to describe the current sentiment and action that you're seeing within the digital asset market.
Yeah, so sentiment is interesting. 2023, if we think all the way back to January, was a rough year for Bitcoin and for crypto markets in general. Like, we started off 2023, at the lows. I mean, Bitcoin was trading near, $15,000 to $17,000 of Bitcoin, and we were coming out of this 2022 of just counterparty blowups and hedge funds collapsing and exchanges going bankrupt and people losing all their deposits and all these terrible, terrible events, which remind me of teenage years for the asset class, getting in trouble, doing things they shouldn't be doing, that kind of stuff. But the industry grows up, and it grew up pretty quick. So now that we're moving past a lot of those hurdles, the sentiment in the market, I've never seen it stronger, actually. And I say that because of the institutionalization. This is really like the point for Bitcoin and digital assets more broadly, where they're being welcomed into the family of financial markets. And now that we're experiencing that and going through that, everyone is talking about this asset. And I have a feeling, like, again, blinders, right? Only market facts, but FOMO, fear of missing out, could get seriously real in 2024 for under-allocated portfolios that don't have any exposure to this asset class. And then also not just investors, but traders who are focusing on, interest rate markets or, energy commodity markets or precious metals. And they're not looking at the asset class that might expand or have the greatest implied volatility, which traders certainly enjoy.
All right. John, thank you so much for doing this with me today. This was a really great event about a whole new topic that we've never touched on here on Conversations with a Pro Trader. So I really appreciate your time. I think the audience also enjoyed it as well. So I will definitely have you on in the future. We can talk more about strategy and crypto and this whole space. So thanks again for doing this, and hope you have a great rest of your week.
Thanks, Greta, and thank everybody for watching. Have a good day.
You too.